The top business stories live from the Sky News City studio. A cry for help from British fruit and veg farmers as nearly half fear they will go out of business in the next year. Avanti West Coast is given a new contract to operate the West Coast Main Line following its recovery plan. Plus, the chief executive of Allied Irish Bank on the state of the economy in the Eurozone. Good morning, this is Business Live with me, Ian King. We begin this morning with breaking news concerning the Co-op Bank. It comes courtesy of our city editor, Mark Kleinman, who joins me now. Mark, what have you got?
Yes, Ian, that's right. We know that the Cooperative Bank, which is controlled by a group of American hedge funds, is being put up for sale. And what I can reveal this morning is that Aldermore, one of Britain's biggest so-called challenger banks, has hired advisors to plot a takeover bid for the Cooperative Bank. Now, this is quite some contrast with the fortunes of the Cooperative Bank over the last decade or so. Ian, you'll remember that it's twice been bailed out, twice been built on the brink of collapse. And we know that Shawbrook, another of Britain's biggest mid-sized lenders, is also in talks to merge with the Cooperative Bank. So it's pretty clear that there is now a serious auction developing for the Cooperative Bank. It has several million customers. It's a major player still on Britain's high streets. And as I say, Aldermore now working with advisors at BNP Paribas on a takeover bid, which could value the Cooperative Bank in the region of £800 million in.
Thanks, Mark. Now, a group of farmers has written an open letter to the UK's Big Six supermarkets, calling on them to treat farmers more fairly. According to the national vegetable box delivery company Riverford, nearly half of British fruit and veg producers say it's likely they will go out of business in the next 12 months, with three-quarters blaming supermarkets and their buyers. Well, joining me now is Guy Singh-Watson. He's the founder of Riverford. Welcome to you. What are the practices that you'd like to see the supermarkets changing?
Well, really, we're questioning whether it is an inevitability that farmers get ever shrinking slice of the cake when it comes to what the British public spend on food. So in my lifetime, it's fallen for fruit and veg from 38% to about 25% would be typical today. And the result is that we see an industry that's on its knees. So, you know, I'm 63. None of my 5 children want to come back to the farm. I think that's very typical of British agriculture. So what we're calling on is for supermarket buyers to adopt the sort of practices that Riverford has. And so the 5 main things are that they pay what they said they'd pay, that they pay on time, that they set reasonable specifications, preferably in agreement with their suppliers rather than imposed upon them, and that they buy what they said they would buy. And the final one being that they have a more long-term approach rather than the relationship solely being dictated by an annual negotiation on price, because these are farmers who are investing in the long-term futures of their farms, and, you know, an annual price negotiation is just not enough security to, you know, invest in biodiversity on their farms or buildings or machinery or building carbon in their soil. You know, these are all very long-term decisions that farmers have to take, and it can't be just based on an annual price negotiation. So we want those 5 things implemented, and we want them to be legally enforceable in all cases. We want the exceptions to be removed from the current grocery code of conduct, so that those are legally how a supermarket has to behave in all cases.
Is there really much, though, that the supermarkets can actually... I mean, don't forget, when they colluded with the specific single aim of bringing down milk prices or supporting milk producers, they ended up being fined hundreds of millions of pounds.
We're not asking for them to, you know, obviously I wouldn't ask them to fix the market in that way, and, you know, to bring up prices either, but we are asking them to just, you know, do what they are supposed to be doing anyway within the grocery supply chain code of conduct, that should be made legally enforceable. And there are 2 other things. One is this investment in long-term relationships. And personally, I'm infuriated by the sort of duplicit these sort of fake brands that supermarkets have developed. For instance, Willow Farm selling chickens from Tesco's. They don't come from Willow Farm. They come from any farm where they can buy them cheaply. This is a brand developed by the supermarkets to keep the British public at a distance from the farmers, so the supermarket can sit in the middle with all the power, tens of thousands of suppliers, 6 big buyers, and they can exploit that situation to their benefit. So if farmers were able to get branded produce on the shelves, I think that would answer that issue as well. But it's really, we're asking for a fairness in the supply chain, which I think most of the British public would like to see, whereby a reasonable proportion of the food money spent on food actually went back to farmers.
Do you not have any sympathy with the position of the supermarkets? So all of them are seeing their profits falling. One of them that you've written to, Lidl, is actually trading at a loss right now. I mean, they're under intense pressure to keep prices down.
Well, Lidl are clearly buying market share as part of their strategy. If you look at the top 3, they made £3.2 billion and paid their chief executives £4 million each last year. So I'm afraid, you're not pulling at my heartstrings, wanting to support them. So no, I don't. They've never made more money than last year. They exploited the situation during the food inflation that we've seen of the last 2 years. Didn't pass that money back to farmers because they have the power to be able to do that.
OK, Guy Singh-Watson, we have to leave it there. Good to see you this morning. Thank you.
Thank you.
Now, the former governor of the Bank of England, Mervyn King, has told Sky News that he thinks the bank will get control of inflation. Speaking in the last hour, Lord King has said that no mistakes were no longer being made.
It's really in the balance as to what should be done. I don't think that they're not making big mistakes now. They're unsure as to whether to raise a little bit more or not. And I don't think it matters a great deal. We're in the right ballpark now, whereas 20 and 21 we were not.
Well, we're going to continue this theme now and look at the Eurozone, which has seen similar interest rate rises over recent months. Joining me now is Colin Hunt. He's the Chief Executive of Allied Irish Banks. Colin, great to see you this morning. Let's start with Ireland. I mean, it looks set to have the best GDP growth in the whole of the Eurozone this year. What do you put that down to?
Well, GDP growth in Ireland this year will be significantly below what it was last year. I think we hit 9.5% in calendar 22. It'll be probably of the order of about 3% this year. The economy is continuing to perform very well, notwithstanding the fact we've had a very significant tightening of monetary policy, unemployment very low, job creation now, employment growth at about 4%, fiscal position is very, very healthy, confidence seems reasonably robust, and while growth will be significantly more moderate this year than it was last year, it'll still look very, very healthy, particularly on a relative basis.
How do you think households and businesses in Ireland are coping with these interest rate rises? 10 consecutive hikes since July last year.
Yeah, we've had a very, very significant, I suppose, policy shock to the system. But we've had a marked deleveraging of the Irish economy going back to the GFC, when the Irish economy was very, very heavily over-levered. And leverage levels in both households and businesses probably running at about 45% of what they were at the peak of the GFC. So household balance sheets, corporate balance sheets are in very, very good shape. We're looking at a savings ratio running at about 12% for households at the moment. And to date, we have seen no signs of distress across the book. We obviously keep it under very, very close watch. We have a very extensive suite of early warning indicators that would give us early sight of any emerging issues. We're just not seeing it as of yet.
Does that mean that the full impact of these rate hikes has not yet been felt? I mean, Andrew Bailey said that about the UK.
Well, monetary policy transmission in any developed economy typically lags by about 6 months. So the actual impact on the economy we won't really see until we move into the spring, really, of next year.
What about house prices? I mean, they're still rising in Ireland as a whole, but they've started to fall in Dublin. What's your prognosis for the next 12 months?
Well, there's two countervailing forces at work here in the housing market in Ireland. One is the very significant increase in borrowing costs, a very significant increase in official interest rates. But that's been counterbalanced by very robust demand momentum. The Irish economy overproduced housing in the run-in to the collapse in 2007, 2008. I think in 2007 we built something like 95,000 units. At the time, Britain, far bigger economy, was producing about 150,000 units. Post the crisis, production fell to about 2,000. And it's been slowly rebuilding over the course of the last 10, 15 years, up to the level where it's now running at 30,000. But that is not yet quite enough to clear the market. So you've got a price dynamic coming through because of higher mortgage rates being counterbalanced by demand being very robust.
And among business customers, you're not seeing any sectors where delinquencies are rising more rapidly than others?
No, looking across the book, we've taken a very forward-looking, conservative approach to provisioning, particularly in relation to commercial real estate. We have about €8.4 billion in loans out to the commercial real estate sector. 1.4 billion of that is land and development. We don't initiate above 70%. The running LTV on the book is about 53-54%, but we have taken a precautionary movement in terms of moving some of the assets from stage 1 to stage 2 in anticipation of an impact on valuations from higher interest rates. It is, I think, abundantly clear that we are going to have negative momentum in terms of commercial property valuations simply because we're dealing with a higher interest rate and a higher yield environment.
Now, obviously, last week, the European Central Bank raised interest rates again. There seems to be a prevailing view in the market now that that's it for the ECB. What's your thinking?
I think it probably is. If we're not at the top, we're very, very close to it, much as is the case over here in Britain, of course, as well. We have seen a very, very significant tightening of policy. Monetary policy is at its best when it's preemptive. But I suppose we had a special set of circumstances in COVID. No policy authority wanted to move aggressively too early. They wanted to ensure that the COVID recovery was a robust one and one that wasn't going to be derailed. And that effectively stayed the hand of policy authorities around the world. But as a consequence of not being preemptive, we are going to be dealing with rates that are higher for longer than would have been the case in a normal cycle.
Colin, we have to leave it there. We've had you on the programme before, but not on the set before, so it's lovely to see you in person. Thank you. Bit of breaking news to bring you. We've just learned that a Newcastle United fan is in hospital after having been stabbed in Milan last night. Eddie Mackay, who's aged 58, is said to be in a stable condition. Newcastle, of course, playing AC Milan tonight in the Champions League. Some other business news stories for you now. And the Department for Transport this morning awarded Avanti West Coast a 9-year contract to operate the West Coast Main Line. It comes after the DfT put Avanti West Coast on 2 consecutive short-term 6-month contracts and ordered it to address poor performance. Well, Avanti, which took over the running of the West Coast Main Line from Virgin Trains in December 2019, is 70% owned by First Group, whose shares rose by 2% on the news. The remaining 30% is owned by the Italian train operator Trenitalia. Shares of Kingfisher have fallen by more than 6% this morning after Europe's biggest do-it-yourself retailer warned that profits for the year would be lower than expected. The owner of B&Q and Screwfix said profits for the year are now likely to be around £590 million, down 7% on its previous forecast. Well, Kingfisher was reporting a pre-tax profit of £317 million for the 6 months to the end of July, down 33% on the same period last year. It blamed weaker sales in France and particularly in Poland. By contrast, its like-for-like sales in the UK and Ireland were up by 1.7%, with Screwfix doing especially well. The banking giant Santander has announced a corporate shake-up expected to lead to the loss of some management jobs. Santander, the UK's 4th largest mortgage lender, is combining its retail and commercial and consumer activities across all markets. They'll now be organised under 2 new global businesses, Retail and Commercial and Digital Consumer Bank. Well, Santander's executive chair, Anna Botín, said the move would allow the bank to serve customers better while delivering profitable growth. Hargreaves Lansdown, the FTSE 100 broking and wealth management platform, said today that it expects the current economic climate to remain much the same for the next 9 months, during which it said would continue impacting investor confidence. HL, which now has more than 1.8 million active clients, said some clients had avoided investing in markets as a result, but were looking to make their cash work harder following recent higher interest rate rises. Well, underlying pre-tax profits for the year to the end of June came in at £438.8 million. That was up 47% on the previous 12 months. Well, the oil price has gone above $95 a barrel this morning for the first time since the 15th of November last year, as the market continues to focus on tightness in supply. There you go. That's exactly the price right now, $95 on the nose, up nearly 2/3 of 1% on the session. On the equity market, stocks in the Asia-Pacific region traded largely to the downside overnight. Only Hong Kong finished higher. But in Europe this morning, well, stocks have been fairly mixed there. Only the DAX in Germany in negative territory right now. Things pretty quiet, to be honest, ahead of tomorrow's interest rate decision from the US Federal Reserve. Talking points this morning on mainland Europe include Monte dei Paschi. The Italian lender is up 4% on reports that the Italian government may postpone selling its stake. Well, here in London, the FTSE 100 is 0.25% higher, just about. Shell and BP have accounted for about half of that gain on their own. In percentage, there you go, that's BP up nearly 1%. Obviously, it's a big company, so it's heavily weighted in the index. In percentage terms, though, Ocado is the leading gainer. That is on the back of a trading update. Yeah, that's up nearly 3%, while Phoenix Group, whose chief executive appeared on this programme yesterday afternoon, it's up nearly 2.25% on the back of its trading update. Kingfisher, mentioned them a moment ago, they're the leading blue chip fall. Look at that, they're now off 7.5% now. Outside the FTSE 100, the recruitment group S3 is ahead by 4.5% on a trading update, while Trustpilot, again, a company whose CEO has been on this programme recently, shares up there 19%. That's after it said full-year results would be better than expected. On the foreign exchange markets, again, it's pretty quiet ahead of the Fed's decision tomorrow night. Pound up 0.1% against the dollar, unchanged against the euro. Well, joining me now is Dr. Jimmy Machete-Terry. He's the senior equity analyst at Investec Wealth and Management. Good to see you this morning, Jimmy. Let's start with Hargreaves Lansdown. Obviously, there's been a fair bit of turmoil behind the scenes there, but the numbers today were pretty good.
I think the numbers were better than expected. Certainly, we are seeing that the assets under management are not really falling that much. Perhaps what might be concerning if one looks under the hood is that it was what's called a low-quality bit. So a lot of cash on the margin did help with that profit before tax number. But also the other thing that we see is even though they are retaining many of their clients, the value of their retentions are falling. I think it was something like 90%, which is slightly concerning. But they've got a new CEO, he's got a new strategy, and what he laid out, the market seems to have taken that well.
Yeah. Now, another stock that's caught your eye this morning, probably one of the unsung heroes of British manufacturing, Renishaw.
Yes, 100%. So Renishaw is an interesting British champion, which is one of the few global leaders we have in what's called precision measurement. And this is really important where we are going to a world of industrial automation, and everything needs to be measured within very, very narrow parameters. So Renishaw had very strong full-year results. They were slightly mixed, partly because of the semiconductor division, which does go up and down quite a lot. Currently, we are in the down phase of demand, but the rest of the business divisions were actually pretty good, particularly the industrial automation and the robotics divisions.
Yeah, one concern a lot of people have had about Renishaw is its exposure to China. Have they said much on that today?
They did mention the exposure to China, and yes, that is a concern. China continues to be a growth area, if one looks at it over the long term. In the near term, yes, there will be bumpy roads, but it's not really just a Renishaw story. Many sectors, we've seen luxury, for example, healthcare. Wherever there's exposure to China, currently things are looking a bit slow.
And what about Ocado? Obviously, the stock whips around all over the place. It's having one of its up days today.
It is indeed. So the trading update we got today was actually on the Ocado Retail, which is the 50-50 JV or joint venture with Marks and Spencer's. And yeah, I mean, they did see an improvement in the volume. They did see prices going up. I think it was up 8.5%, which was still slightly behind inflation, but still a positive sign. But I think the more important thing to consider when it comes to Ocado is actually the technology solutions business. And that's the one that's going to determine how the shares fare over the next few months. OK, Jimmy, we've got to leave it there. Good as ever to see you this morning. Thank you. A little bit of breaking news to bring you. You'll recall that a group of Americans detained in Iran for several years and freed in a prisoner swap. We've just learned that they have arrived home in the United States. No doubt we'll have more on that throughout the day here on Sky News. In the meantime, still to come here on Business Live, the digital challenger bank CashPlus is back in the black. I'll be joined next by its chief executive. Thank you. Good to see you.
We arrive. A secret hospital hidden in the Myanmar jungle, treating the victims of this bloody war. This is hardcore emergency medicine in the hardest of circumstances.
So you'll be doing brain surgery today? Maybe.
Here, the resistance lives or dies. It's been quite remarkable. You have to see these things, but banking hurts when you do it.
I'm Inzamam Rashid and I'm Sky's North of England correspondent, telling stories from this culturally rich region I call home.
It's going to become very similar to other places and lose its unique qualities.
It's steeped in history.
If the Taliban found your family, what would happen?
I think they're just going to straight away execute them.
There are issues of racism in all levels of cricket.
I was on the balcony a couple of times. I was nearly gone.
Football is a joy to watch, and when people are disappointed, you can feel the hate.
I just felt physically sick because I was like, that's really in my system.
We take you to the heart of the stories that shape our world. Even before the pandemic, GPs were pleading for help. Government expects more face-to-face contact with patients in return.
Men, they want to force you doing something which you don't want to do, just because you're homeless and you're looking for a warm place to sleep.
We give a voice to communities often unheard and unserved from a region with a distinct history and global impact.
Slide Emirates, slide better. Fly Emirates, fly better.
Thank you.
Welcome back. The digital challenger bank CashPlus has swung back into the black on the back of higher interest rates and a rise in other revenues, including card payment fees. CashPlus, which was awarded a banking licence in February 2021, reported a full-year profit after tax of £5.5 million, compared with a loss of £3.6 million during the previous 12 months. Well, with me now, I'm very pleased to say, is Rich Wagner. He's the Chief Executive of CashPlus Bank. Good to see you, Rich. Been a while since we had you on the programme. Obviously, all banks benefit from rising interest rates. Is that the end of the story? Is there more to it than that?
Oh, no. I think the backbone of the British economy around micro businesses, small businesses, has really been our benefit. We've seen tailwinds, yes, in interest rates, but the transactional volumes that we're seeing on our products has been very encouraging. That revenue stream, as you mentioned, is not just around treasury income, but across the board, double-digit revenue growth in all the key revenue drivers that have given us that profitability this year.
And how do your revenues break down these days between consumer and SME?
Well, certainly right now, you're looking at about 3/4 of that revenue and profit coming from the SMEs now. And certainly our focus is really on that micro and sole traders in the marketplace today. Definitely the most underserved of the population as we see it.
And you're still seeing plenty of demand for credit from those customers?
Yeah, absolutely. Certainly, we feel that we've been doing a really good job over the last number of years creating the right type of models that allow us to employ credit, overdrafts, credit card propositions to this market in a responsible and affordable way.
Now, you're targeting a 10% share of the SME market within 4 or 5 years. I mean, that is pretty punchy. I mean, it's taken Santander more than a decade to get to 6%.
Well, yeah, no, we have great aspirations to do that. We certainly are capturing 7 to 8% of company formations today, and certainly something that we're really trying to strive over time to create a embeddedness of both credit and transactional banking to these small businesses.
But what makes you think this is your moment? I mean, the big four, as we call them, they have really entrenched market positions.
They have entrenched market positions, as we like to call the SME, but when you really look at that micro business, the startup, the entrepreneur, they don't really treat those particular customers or focus in that area simply because I think the digital capabilities and platform that we have really differentiates ourselves to create a low-cost product solution for those customers, unlike other traditional banks that do have current large market shares in this particular area.
And what are you seeing on the consumer side just now?
Consumer, there's definitely no question with the cost of living and uptake on our personal credit card. No question that we want to make sure that we're lending in that space responsibly, but certainly the demand in that area is good. But the resiliency of these consumers, certainly in terms of delinquencies and charge-offs, as we've seen, we have not seen any deterioration in our credit quality, which is encouraging.
What proportion of applications for credit cards do you turn away?
It's anywhere between 30 to 40%, but certainly a lot better than many of the other competitors out there.
And what sort of assumptions are you making about the UK economy for the next 12 months? Do you think we're probably going to get another rate rise this Thursday? Do you reckon that'll be it?
I hate to be a forecaster, and I'm not an economist, but the one thing I've always told my team and certainly to the pundits out there, hey, I started this business when base rate was 5.5%. I'm always a little bit controversial to say we're not in a high interest rate environment. We have now gravitated back to the 50-year average of the Bank of England rates. So we need to get used to this new norm. It's not a completely new norm. It's just a new norm that's taking its effect from the averages that we've seen. And I think we're going to see, I'm hopeful that we don't see more rises because it's not about being effective around this, but the economy probably has seen enough. And I'm hopeful that we're probably going to have to deal with this for consumers, for businesses, rates in the 4 to 5% for certainly the next 12 to 24 months.
OK, Rich, got to leave it there. Great to see you in person again.
Great. Thank you very much.
That's it from me. I'm back this afternoon at 4:30 with our afternoon edition. Hope very much to see you then. In the meantime, do stay tuned. Coming up after this short break, it's Kamali Melbourne. See you later. Cheerio.